Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Close Show. As always, Scott Carson, excited to be here with you today. Really excited to have somebody on the podcast today who's going to share his wealth of knowledge, not only in real estate investing, but the finance field of aspect and how it's really helped him build systems and really do some amazing stuff on the real estate side of the investment vehicles out there for you. Our buddy Chris Naugle has joined us. He's a recognized entrepreneur, speaker, trainer, and real estate investor. He has 16 years of high-level experience in the financial services. That's what we got in common. We're both ex-financial advisors out here. Helped him manage over $30 million in assets under management for him. That's a nice big number there for you. So you've maybe seen him and his wife, Lorissa, Renovation Designs on HGTV Risky Builders, House Hunters, My Lottery Dream Home. We're just really excited to have him on today to talk about his passion of real estate investing. So good afternoon, Chris. How's it going today, bud?
Woo, I'm pumped, man. I'm doing great. How about you?
I can't complain, trying to stay out of trouble. Now, you're also the host of the Money School podcast, correct, as well?
That is correct. That is correct.
We got some fellow podcasters, ex-financial advisors. We're kindred souls from another round there for you. So take a second. Why don't you reintroduce yourself if I didn't hit on the knob, but talk about kind of your journey to where you're at today and your background.
Oh, the journey. I love talking about this. I got to take it back to the ripe old age of 16 years old. And at 16, I grew up in a lower middle class family. We didn't really have money to do anything besides keep a roof over the head. Mom and dad got divorced when I was young. Dad was an alcoholic and my mom had to raise me. And, that's not the norm for everybody, but that's just how I grew up. I grew up not really knowing anything about, what it was like to have money. So at 16, I got a big boy job. I was working for this restaurant and I was degraded so badly at this restaurant that every day I'd come home, I felt like I was worthless. And my mom saw this, but she didn't know what to do about it. And I was probably depressed, but it didn't matter. The key thing happened is one day I got pushed to that limit and I came in and I did the most important thing in my life and I decided to quit. I quit trading hours for dollars at that moment. I rushed home, told my mom thinking she was going to be mad. And I said, Mom, I'm going to open a clothing line in the basement called Fatman Clothing Company, PH, because that was what was cool back then.
Fat, baby.
Fatman Clothing Company. And that's exactly what I did. I took a $500 loan out from my local credit union and off I was making t-shirts in high school, selling them out of my backpack. That evolved. At 17, I was selling them all across the States. I was trying to become a pro snowboarder at that time. So I was doing a lot of traveling. And every time I'd travel, I'd see these awesome shop owners, these guys that I looked up to that I sold my clothes to, and they had these awesome shops. And I'm like, I got to have one of those. I have to have my own store. So at 17, I came up with the big dream of I want my own store, Fatman, Fatman Clothing. And I was the man. Well, you get the rest. But all I needed was 70 grand. And this is kind of my first dive into money. And I thought, hey, no big deal. I'll just go around and I'll ask everybody in my family and everybody I think that has money to lend me 70 grand. Now, bear in mind, I'm 17. So I went around and you know what happened. I heard no way, hell no, absolutely not, on and on. I almost gave up. And then I finally got a yes. But I got a yes from that one person. Yeah, I love that yes. Because every no puts you one step closer to
Amen
a yes.
To that, brother. Amen to that.
Yeah. And I got a yes, but the yes came from somebody that I call today the unconditional one, and it was my mom. But my mom had no money. She had no money. She could barely make ends meet. But you know what she got? In the divorce, she got the house. And that house had exactly $75,000 in equity in it. And my mom went out on the line and she put that house up for collateral so that her punk 17-year-old snowboard kid could chase his dream and open Fatman board shops. And, I look back at that moment, Scott, and I'm like, that was a foolish thing of mom to do. That was really a silly thing of her to do, because what if I didn't make it? What if I failed? Like, what were the consequences to that action? But you know what, to my mom, those consequences were much bigger than losing the house. Those consequences were her son not being able to live his dream because she was never able to chase hers. So a lot happened in between there, but I'm going to fast forward quite a bit. So that store went good. 5 years later, paid that loan off through a really big party, and a lot happened there. But it kept going on, and I kept expanding those stores. I went on to be a pro snowboarder. In the early 2000s, when the planes hit the tower, I witnessed my first recession, and I was highly leveraged. At this point, I was opening stores, living the life, traveling, snowboarding. Like, life was good, right? I was in a lifestyle business, and my business halted. One of my stores that we had just opened, they decided to rip the front street up, and that store was pretty much defunct. So I had to literally decide, what am I going to do? Am I going to just close, or am I going to go out and do something different just to get through this period of time? You know, that transition. We talk about transition funding a lot. I needed that transition. So I was either going to deliver pizzas, and this is real. I was literally considering delivering pizzas at night, or I was going to get a job, which I didn't want. But I put my resume out, and Scott, I landed in the most strange place, the financial world. I guess they like those entrepreneur types. And the funniest thing happened. That was supposed to just be a temporary thing, you know, and I ended up falling in love with it. I truly fell in love with it, and I dove in, studied, got all my certifications, all my licenses. And after a little bit of time, I was crushing it in the business. And that takes me to 2008. In 2008, I was like a rock star in the financial world. I was one of the top guys in the firm I was with. I was knocking it out of the park, high six digits. Just, you know, you as an advisor, and if you're not an advisor, you probably wouldn't understand this, but we get a little bit of an ego. You know, everybody's propping you up, and like, you know, you're doing all this big stuff, making all this money. You start to think it can't end.
Yeah.
So in 2008, I flipped a couple houses. Like, I was just doing it. Pro snowboarder at that time. And at that point in time, I had my next big idea. And my idea was I was going to buy this dilapidated building, this big building, the ones that you see when you drive down the road and you look at them and you're like, man, they got to tear that building down. Mm-hmm. And that was what I bought. And I borrowed money from the wrong person, somebody I shouldn't have ever taken money from, but I did because, hey, I was like, I got this. And I don't know if you guys really listened because I went quick through that, but did you hear when I did this?
2008.
2008. Yeah. Okay. The start of the financial crash. And boy, oh boy, my life fell apart very quickly. I literally got hit by a Mack truck at full steam ahead. And it got so bad that I got to be one payment away from being completely bankrupt. I knew that the guy I borrowed the money from, if I didn't continue to pay him, I wasn't just going to lose the building. I'd probably lose a couple fingers at best. But now you can kind of understand the kind of guy I took money from. So at that point, I was a self-made guy. I had a bit of a chip on my shoulder, and I'll never forget this night. I came home one night. I was just down in the dumps, and my beautiful girlfriend had just moved into my house. And I remember coming home, and I had to look her in the eye, and I had to say, sweetie, I need your help. I need your help paying the mortgage. I need your help paying the utilities. And you're not going to like this. We have to rent that bedroom out because I can't make it. And many women, you know, I'm surprised that she didn't just take off, because a lot of women would have just went running, but she didn't. She stuck it out, and she ended up marrying me. But we made it through that period of time, barely. And I remember, like, after that, it wasn't easy and kicking and screaming, but I wasn't willing to quit. I was the determined kind of kid. And people said, dude, you're determined. And other people said, man, you're freaking crazy. But that moment, I loved Warren Buffett. He was my idol. And he always said, buy low. And I watched real estate values plummet, and I was an advisor. So I'm like, well, this is it. So I started buying real estate. 2009 to 2014, I dove in and I got up to 36 units. And you would think that, like, that's that recovery, like shiny story after all. No. At that moment, I also realized I was in trouble again. I was literally in 2014, I was living paycheck to paycheck all over again. And at that point in time, I was over leveraged. I was underknowledged. And the thing that I started to realize is I kept using the same knowledge I'd been taught in the financial world and everything else. And I kept doing that over and over, and it kept landing me the same place, which was money, then broke, then I get money again, and then I'm broke again. And that's where I was. And I'll never forget it. At that time, something crazy happened. I was ready to throw the towel in because we had to sell off in 14. We had to sell all 36 units. And me and my wife had got, like, worked up and bought our dream house. And that's a big accomplishment for, like, any young couple to buy their dream house. Mm-hmm. And right after we bought it, it was like a year and a half, we had to sell it because I just couldn't do it. I couldn't make it. And, I got a postcard in the mail, and I was so down on my luck. I was just hammered. I didn't care. Just whatever came, I was like looking for that opportunity. And it was an opportunity to go to a 3-day seminar to learn how to flip houses. Now, I know, anyone watching this, you're probably thinking, dude, don't you ever learn? And, maybe I don't, but here's the truth is I didn't go to that seminar because I wanted to learn. I went to that seminar because they were giving away a free iPod shuffle. That's why I went, and I had nothing to lose. So I had an iPod shuffle to gain. By day 2 of that seminar, I learned not a whole bunch of stuff, but I learned one thing, and that one thing changed everything for me. And here's what it was. I learned that what the successful real estate investors were doing, what the wealthy were doing, and what the elite were doing was the complete freaking opposite of what I was doing. And I also learned that everything I'd learned in the financial world, being an advisor, they never taught me how this worked. They never taught me how it worked, how money worked in real estate. Heck, they really never even taught me how money really worked. And at that point, I dove in. I spent a lot of money I didn't have, getting coached, getting mentored, literally clawing my way into every mastermind, every group I could where the people that I wanted to be like were. And they took note of that. And I started just giving time to them to make sure that whatever they needed, I was there to provide it so that they would give me something. Givers gain, right? We all know that. If you give, you get. And I knew that. And I didn't have money. So that's what I had is time. And the long story is I dove in, I started learning, and that's when it all changed. My life literally became a rocket ship of success because I started learning how money really worked. And I started seeking knowledge. I started seeking the millionaire mystery, I guess is what you would call it, that knowledge of what the millionaires knew that I didn't. And that's how I got where I am. And today life's a lot different, man. I mean, you said some of it, but I mean, we do a lot of real estate. I travel, I say the world, but really I mean US and Canada. I travel around every week speaking on how money works and in an effort to change people's trajectory and people's path, because I don't want them to, follow that same roller coaster I did.
Yeah, there's a lot of people that get into real estate investing because they've watched TV, they've watched, film. That's what we got started back in 2002 was flip this house. You need flip this house and everything. Rosie, ex-wife wanted to pick out paint and carpet and design that. I grew up in a hardware store so I could fix everything basically. But that's a lot of people get in. What would you say is the biggest mistake looking back? I know you said borrowing money from the wrong guy or leveraging your investments wrong. Were you going out taking out traditional loans or?
Bingo, right there. So
okay.
My biggest mistake I made, 2009 to 14, I used conventional banks, and I used them the way that we always use conventional banks. I was taking personal loans out, 80%. Then I was coming up with the 20% plus closing plus rehab out of pocket. And what I didn't realize, I just thought that gravy train would never end, but eventually I hit the financial wall. And that was end of 13, early 14. And I hit the wall twofold. Number one, I had no more money to keep funding the 20%, the rehab. I wasn't getting the renovations done as fast as I had hoped so that the rent roll would support it. So I was strapped for cash. And the most important thing that I learned at this point is holy crap. At a certain point in time, banks just say, okay, son, no more. You can't borrow any more money. Your debt to income ratio doesn't work. And I'm sorry, we can't give you any more money. Oh, and by the way, that line of credit we gave you, you can't use that anymore.
Yeah, right.
And I'm like, what am I going to do? I can't work any harder. I can't work any longer. There's nothing more I can do to make more money. So what do? You fold them. And I felt the only good thing that comes out of that, Scott, and anyone that's listening, is when I did sell, at least the market had rebounded. So I was able to make a little bit of money on that, not a lot, but a little bit, so that it wasn't for nothing.
I see that happen all the time. People get in the game. They don't understand that buying retail with a 20% down at full price. The only people making real money on that is the realtors with the commissions for the most.
That was it. My realtor kept feeding me. I'll tell you, she loved it.
You're on the gravy train there. Not exactly where you want to be, though.
Oh, that's perfect, man. That couldn't be any better.
So let's talk about, I think one of the biggest things, and I say this all the time, is that banks and financial institutions are great at kind of brainwashing people into believing specific things about money and interest rates and savings. When you get into the real world, and I mean the real world, what we're in now, buying and selling, whether it's debt or fixing and flipping homes, stuff like that, it's a whole different kind of ball game as far as money. 1 to 4% isn't safe. We look at 1 to 4% returns as being risky, as tying our money up long term. Now, would you agree to that?
Oh, 100%.
Yeah. And that if we're looking to make at least 12% or more, it doesn't mean it's risky. It just means you're buying things right and leveraging things, correct?
Correct. Absolutely correct.
So what's some of the biggest eye-opening things that you've seen, kind of going back to it? Is one of those things? Is something else? Because the financial advisor, don't get me wrong. Hey, if you're managing $30 million assets, you're doing something right.
Yeah, I was really good at what I did. I was really good with market patterns.
Yeah. So let's talk about that.
Sure.
Where do you see the market kind of going, and what are you kind of doing to hedge your bets or leverage yourself properly this
All
time
right.
around?
I'm going to try not to go down a rabbit hole. This is my absolute favorite topic, but basically it's quite simple. I mean, I love Warren Buffett. I already said that once. I'm going to say it again. He says this. Warren Buffett says to be successful in the markets, and I don't care whether you're talking about stocks or real estate. So folks, just realize it doesn't matter what one you're talking about. You have to do three things and three things only. Number one, you have to buy low. Okay, that's the first thing. And we all understand that. Just buy low. Yeah, Chris, that's not very smart, but I got it. Number two, you have to sell high. Okay, you think you got that. And number three, you have to not lose money. And everybody's like, well, I don't really understand that. That's like Bed Bath and Beyond, but I don't get the Beyond part. So the whole concept here, and it's so freaking simple, but we want to make everything so complicated because we've been taught that money is complicated. And to not lose money in real estate or stocks, all you have to do is follow 1 and 2. You have to buy low and you have to sell high. So back to the markets where we're at. Okay. So where are we at? And that's an interesting question. We all remember 2008. It was like it was yesterday for some, and for some people, they've altogether forgotten about it. But 2008 should have taught everybody a lot. And it should have taught everybody that there's a pattern, a very cyclical, repeatable, predictable pattern, just like weather. Okay. You can predict the seasons, right? You can predict weather storms, and so can weathermen. And everybody knows how the market works, but everybody ignores it because they just feed us the information to keep us buying in. Well, here's the thing. 2008 was how long ago? It was over 10 years ago. Okay. Markets work in a 7 to 10 year cycle, always have, always will. You go back to the Great Depression and you tell me one cycle that didn't fit that bill. And you can find all sorts of little cycles that you'd be like, wait, hold on, Chris, that one was 14 years. No, it wasn't. Look at the cycles. You just have to understand what the patterns are. So if that's the cycle, wouldn't that certify and basically tell us all that we are at the top of a market? Maybe not the very top, but I don't know where the very top is, and I'll never know where the very bottom is, and nor will you, or nor will the smartest financial gurus in the world. It's impossible to predict. So if we can establish and just admit that right now we're at a high point, wouldn't it make sense to sell? Well, it would. But how many people do you know that are actually selling? How many people are selling their Apple stock, their Amazon stock, their Google? They're like, those are never going to go down. Apple changed the world. Indeed, Steve Jobs did. Amazon, that's taking over the world. Indeed, it probably will. It has nothing to do with what happens when the market goes down because all stocks will follow the exact same pattern. Real estate, however, is a lagging indicator. So that's why we're in the real estate business, because it's a lagging indicator. And secondly, it's a tangible asset and one that will never go to zero. So if we're at the top of the market, the smartest thing people can do is just get out of the stock market. If you got a 401k, I don't mean take all your money out and pay taxes. I simply mean inside the 401k, shift your money into the safest thing you can go into. Cash management, the fixed account, because if it makes nothing, let's just assume your cash management account pays you 0 interest. Isn't 0 better than losing 5%? Mm-hmm. Isn't it better than losing 10 or 20 or 40%? Last time I checked, it is. And the funnest thing about sitting in cash at the top is it's like climbing Mount Everest. You get to the top, and you know what everybody wants to do at the top? They just want to stay on the top. They just want to look around and be like, this is absolutely spectacular. This is beautiful. Because you know what's so nice about being on the top? You can look down and say, I'm going to go there, or maybe I'm going to go over there, or maybe I'm going to go over there. That's called an opportunity. Well, that's what we all have right in front of us if you get ready for it. So not to go any further than that, that's what I think about the market patterns. And I don't just think it, I firmly and 100% believe it. And there's not a soul that I would talk to that would ever talk me out of that. I don't care how smart they are, because that's what
I couldn't agree more with it. I mean, we're at the top. We've recovered greatly, exactly like the market trends, things go up and down. Now, I think there's a variety of things that are feeding into stuff that we're going to see a little bit. I don't think it'll be as extreme as it was 11.
Absolutely not. No, it will not be 2008 over again. Nope.
Yeah, but I think we're going to see other things hit. I think we're going to see dramatic changes in the credit card debt and student loan debt. And
bingo.
Yeah, the look at the default rates on auto debt right now.
That's huge.
Those are all things that lead to people being able to pay their bills or not paying their bills. And I think back to 2008, 9, before that, as a mortgage banker, mortgage broker before that, a lot of people, you could fog a mirror, get a loan, right? People are taking out equity, buying toys, trucks, boats, RVs, whatever. Okay. And we're seeing a lot of that now. People are like, oh, my house has increased. We got 12 mortgage companies here in my office that are just growing like crazy, getting refinances. Subprime is back in the non-prime stage these days. People are cashing out. People are overpaying for assets because they want to get into the game. That's always a sign.
Can I say one more thing on that?
Yeah, go ahead.
It's another Warren Buffett thing. When others are greedy, be fearful. When others are fearful, be greedy. What is Warren Buffett buying right now? And that should tell you something right there.
Exactly. Or the fact that he just donated, was it $1 billion in stock to one of his foundations? Exactly. Wonder why. Exactly. Because he's wanting to donate that there, get it off his book so he's not taking the hits and stuff like that.
And he has some other reasons he donates things too. And there's just maybe a tax deduction, I think.
Just a little bit of a tax, especially when you donate it to your wife's foundation. Yeah. Or like Zuckerberg donating billions to his wife's foundation.
All of you should really study foundations and understand how they really work and understand why people donate billions or their entire life savings to a foundation. Then once you peel that onion one time, you'll be like, you peel it 2 times, you're like, I'm doing that.
Yeah, exactly. The lights will go on, So
wish I had a light switch.
Yeah. You know what? I'll have to send you one of my noisemakers here.
That's great.
Next time. But let's talk about it. I mean, where are the opportunities for somebody that's either getting into the game or looking to do some things? They want to, it's like, oh my gosh, should I just sit around and wait?
The opportunities are huge. And I always paint the picture as there's always going to be more opportunity in a downward cycle than there ever is in an upward cycle. It's kind of like, here in Buffalo, we get a lot of snow, right? And when we get a snowstorm, the guys that have the snow plows and the guys that have the salting trucks, those guys salivate because they know they're going to make a bloody fortune pulling people out of ditches, plowing driveways, just doing what they're trained to do, right? So that's all they do. They wait for that opportunity, but they have to wait for the storm. So there's a lot of people, and this could be every single person listening to this right now. You all could benefit from this. One of the biggest opportunities of maybe your lifetime is right around the corner. And all you have to do to figure out that opportunity is be ready for it. To be ready for it, all you need to do is get your bank ready, right? In 08, 9, 10, 11, if you had money available to you and you knew where all the money was for all those deals that were about to happen, that were about to be bargain hunting deals, if you knew how to get all the money for those, what do you think your opportunity would be? Could you become a millionaire? Could you become a multi-millionaire inside of 3 years? You're darn right you could. And you know what? I know a lot of individuals that in 2009 were ready and they got beat up. They got hammered. They got people telling them they're fools for what they were doing right before that storm. And you know what? They became millionaires time over time over time because all they did is they sat there and they waited on the sidelines. They knew how money worked and they had a bunch of money ready. Now, and the other thing too, I know a bunch of you are thinking, Chris, this sounds great, but dude, I don't have any money. Nor do banks. Banks use everybody else's money. So that's all you need to do is you need to mimic what a bank does. It's that simple, everybody. If you know where all the money is and you know what banks do and how they do it and the simplest things, then you can get your bank ready too. And that's what I'm doing. Right now, I've sold a bunch of my rental portfolio. I'm not doing as many flips. I'm still doing wholesale and wholetails, but literally like as fast as I can get them done. I want things as short of a period of time. And I'm just waiting for the big show. And I'm banking. I'm just putting it all in the bank and it's doing nothing. It's making like nothing. Well, it's making 4%, but that'll take longer than 45 minutes to explain how I'm getting a guaranteed 4% on my money. But it's sitting there waiting so that when this happens, I'm literally going to sit there from the top of the mountain, remember, salivating, going, what do I want? What do I want? And all I need to do is wait for the signs. And the signs sound like, do you have a scream on there? Because that's what they sound like. People scream. Yes.
Hang on one more time.
Oh my God, it's so good. So good. That's exactly what it sounds like, folks. When everybody is doing that they're losing a bunch of money in their 401ks and their stocks and, things are going terrible and people are losing their jobs. And in this one, you start looking for people's cars getting repoed and student loans defaulting. Those are your signs. That's like the bell ringing again. And when the bell rings, you start buying. It's just like a boxing match, right? Ding, ding, ding. You go out and you fight. Well, that's when you go out there and you start fighting. But you know what? Your opponent is exhausted already. So your fight's super easy. 2, left, right hook. And you got it. And that's what you do. You just got to get it ready. But it starts and it ends with money. So if you can just understand how money really works And it's not complicated, folks. You don't need a degree in finance like we have. You don't need to be a financial advisor. You need to understand how the wealthy and how banks operate and what they do. And the second thing you need to understand is where all that money is. And then you need to know how to get it. And I'll tell you one way to get it, or actually, let me tell you how not to get it. Go out and do what I did when I was 17. Go out and start asking people for money and watch how fast you don't raise money. Start solving people's problems. That's how you get money. And it's so easy, folks, because everybody has one thing that they want. Everybody has a same common problem. They all want to make more money. And if you have the golden ticket and the opportunity, ring, 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 real estate, the opportunity to show them how to make more money, then you hold the golden ticket to getting more money. And all you need to do is solve other people's problems, solve their problems. And it's not as difficult as a lot of people want to make it. If someone has a 401k, show them how to make a better return secured. I tell people, I say, hey, how about I could show you how to double your return in your 401k with a secured investment? What if I could show you that? And then what I do is I don't ask for money. I talk about my opportunity. I say, I got, here's this deal. Check this thing out. It's amazing. I got this great flip. I bought it for a song. These people, they had to sell it. I stole this house. Look at these numbers, Mr. Neighbor. Like, you're just having a pop with your neighbor. Look at these numbers. I'm going to make $50,000 on this flip. This is insane, man. I can't believe I wasn't doing this, years and years ago, because this would have changed my life. And your neighbor's sitting there going like, dude, how do I get involved in this? And you say, well, I don't know. You want to do this deal with me? Well, yeah. Well, like, what does that mean? Well, I don't know. Like, how, I got to find the money for this deal. Like, come in and like, how about you be the bank on this deal? You fund this deal. Oh, dude, I don't have any money. I'm like, yeah, we just got talking. You have a 401k and you're talking about how terrible your returns have been. Like, right there, man. Oh, I can't take that money. I'll pay taxes and penalties. Yeah, you can. Go to your HR and ask if you're allowed to take a loan. I bet you any money you can take a loan. Oh, really? Well, don't they charge me interest on that? Yeah, they're going to charge you interest, but guess who gets that interest? You do, man. You're just going to pay yourself back with interest. And that's the best thing ever. You're going to pay yourself back with interest, but I got one better. What if I pay your interest and I double your interest? So let's just say your loan's 5%. What if I give you 10%, man? What if I double what you got to pay? Even though you're keeping your 5, I'm going to give you another 10%. And I'm going to give you the first position lien on this. I don't know what that means. Well, that means if I don't do what I said I'm going to do here and I don't pay you, you could just have this amazing deal and the 50 grand's yours. And we'll get the attorney to draft all this up. I'm not an attorney, man, so I don't know how to do this, but your attorney can review the docs with my attorney and like, let's just do this, man. Come on. That, folks, is how it's done. I don't care if it's a 401k, an IRA. I don't care if it's a home equity line of credit. I don't care if it's a savings account. You duplicate what I just said. How hard was that?
It's not hard. And one of the most beautiful things that I love that you said there, Chris, is you're talking about the deal. You're talking about the case study. You're talking about something and all. And that's one of the biggest things is investors don't like to talk theory. Can we agree to that? They want to see something tangible, Chris, right?
Right.
And what would you say to those? I mean, you've a great little pitch there, great little aspect of it. It's technically, it's a pitch. It is exactly what,
but it's really how it happens. I'm not kidding. And I've done that so many freaking times over beers or over a glass of wine. I can't even begin to tell you how well that works.
It works phenomenal. And especially we talk about doing something like that in the note space. Like, hey, we're buying distressed debt. And here's the deal that we're looking at. Here's the deal that we just closed on. And some different case studies. The idea is here is you're just talking. When you start talking about returns, and I've seen it, you don't do this, which is a beautiful thing. I've seen a lot of financial advisors go in and sit down with clients, talk about PE ratios, and I'm like, what?
You see my eyes, dude? I come from that world. My eyes just roll back in my head, and I'm like, oh, here we go. I'm not talking about this.
Yes, exactly. I'm like, they're just trying to sound like they're being smart, and it takes people away. Yeah. Just talk in layman's terms. Just have a conversation. And here, I'm originally from Minnesota, so we say pop up there as well, eh? But down here we say Coke. You're gonna have a Coke or a glass of tea in the South part here. But it's just having a conversation and sharing the word, sharing what you're focused on. Now, let's talk about some of the things, maybe the things they should not do. When we talk about some things they should not do, Chris, what are a couple of things that they should not be doing? Sure. During raising capital? If
you're raising capital, I'll tell you, there's a lot of things you shouldn't do, but let's just hit on some of the biggest ones that I see a lot of people doing. People are going out there and guaranteeing a return. Don't you ever, ever, ever guarantee a return. Cause I'll tell you what, well, you could go to jail. You could go a lot of places, but jail is just one of them. Don't guarantee returns. You can't guarantee a return. It's impossible. You just don't do it. Secondly, never, ever, ever borrow money in your personal name. You violate the Dodd-Frank rules. And it's what got so many people in trouble. If you're going to go out and you're going to talk to your neighbor and your neighbor's going to, do the deal with you and lend money to you, they're lending money to your entity, to your LLC, your S Corp, your C Corp. And the other thing right along with that, don't ever even touch the money. Just don't touch the money. Okay. The money goes from your neighbor or your neighbor's 401k, your neighbor's IRA, direct to the title company and gets held in escrow until that deal closes. Or if you're in a title state like we are, direct to the attorney's escrow account, and it sits there until the deal closes. And when the deal closes, the title company or the attorney are instructed to file the paperwork. And what paperwork? Well, the promissory note and the mortgage. Make sure that that neighbor is in a secured position. Then once the deal's closed, the house is actually now your entity owns it, right? You or your entity owns that house. At that time, the title company and the attorney can send the money back to you. Now, this is kind of just personal preference, but this will keep you out of hot water. So this isn't a no, but this is a smart yes, and you should do this. When that money comes from the attorney, open up a segregated bank account for that particular deal so that everything you do with that deal is in one bank account, so that when you have to answer questions, hard questions, when things don't go the way that they're supposed to, and if you think I'm kidding about them not going the way they're supposed to, trust me, it'll happen. Just give it time. So the money's in that. There you go. The money's in a segregated account when you need to show him that all the money was spent in the deal, not on the new car you're driving, not on the fancy suit, not on the trip to Las Vegas. It's documented, and you got a clean bill of health right there. Just be transparent. That's it. So, and there's a lot of other things I could tell you to do, but those are just some of the most important ones.
That's a really good one there. Making sure that attorneys are handling all the paperwork, or title companies handling it, having it wired into a neutral account. And making sure to track all your expenses and things along the way. It makes things a whole lot.
One more?
Yeah, of course. Please do.
I'm mad that I didn't do it. Make sure that when you get the insurance on the property, that it lists your neighbor as additionally insured in case for some reason the house burns down or a tornado takes it away, that insurance company writes a check to your neighbor directly so that you don't just get one check and go, whoa, I'm going to Cabo. So just the insurance policy is very important to protect not only you, but also the investor.
Okay, you meant investor, not neighbor, right?
Yeah, neighbor, investor, same difference.
Okay, making sure because John Smith next door. Your neighbor that you borrowed the money from.
Yeah. Remember we had the conversation over
yes.
with the neighbor. Yeah. That's your investor.
Whoever the lender.
You guys know that's your. And the reason I do that with your neighbor is because I want everybody to understand that the money that you need and the people that have the money for your deals, they're not the guys driving. Well, they're usually not the guys driving the Porsches, the Ferraris, living in the big fancy houses. They're the people living next to you, the people closest to you. It's called your primary circle. Friends, family, coworkers. Those are the people that have your money to fund your deals in the beginning.
Yeah, those guys that are driving Lamborghinis don't really own them. They're just leasing them for the most part. Renting, borrowing, usually the same with the girlfriends that go along with those. But anyway, the thing that's funny that I love that you just shared out there is very simple. It's a simple plan. Real estate investing is a simple business, whether you're wholesaling or hoteling, fix and flipping. If you just keep it simple, you get to be too crazy out there and make things complicated. It not only complicates your business, it also complicates the private capital raising, right?
Mm-hmm. Absolutely.
So couple things. There is 24 million households, 24 million households that have a net worth of 100 grand or less in IRAs, basically. They're the largest untapped 100%. Market out there. And they're the next door neighbors. They're the truck drivers. There's the people that you come in contact every day. The people that have millions and millions and millions of dollars, they've got their advisors. They've got their accountants or their gatekeepers to kind of manage them. Can we agree to that, Chris?
100%.
Yeah. So what are some of the best ways that you would encourage them to start that conversation? Besides sitting down with somebody, how do you get to that conversation? You don't just start running up to your neighbors and say, hey, I got a deal I'm working on. Let's talk about some of the most effective and very simple ways for people to maybe start this conversation.
Just starting a money conversation. Because, and I call it the big lie, but we're not going to get into that today, but that's just kind of what I call it. And I do a whole series on the big lie, but we're so taught not to talk about money. We're taught not to talk about money to your friends, your family. It's just kind of like we're brought up, oh, don't talk about money. But my thing, talk about money, but do it the right way. And here's how I do it. I talk about my money, my IRA, my 401k, and I talk about the things I'm unhappy about. I talk about the things I don't like. You know, my advisor called me, and sorry if there's advisors on here, but you know what? I have earned 16 years worth of hell to earn the right to do this right now. So I'm going to take it. You know, my advisor just called me and he's trying to sell me this new thing. And I don't know, it just doesn't sound right. And I heard this other guy talking about the market being at a high point. So he wants me to buy this thing. And I'm thinking, man, he's just doing it just to make a commission. What do you think? Like, you got an advisor that's doing that kind of stuff, and the person you're talking to is going to talk about a war story or something that they're not happy with. Yeah, my advisor doesn't even call me. You should be lucky your advisor even calls you. My account's been going down the last 2 quarters, and he hasn't even called me once. You know, doesn't that just suck? You know, it's like we're paying them so much money, like they're supposed to be watching their money all the time, because I'm busy working. I'm driving a truck and doing whatever I'm doing, and you know, they should be watching the money. Okay, so right there, that little frame up, that's just how you begin a conversation. Talk about your pain, and they'll talk about theirs, because everybody likes to talk about their problems. And then when they talk about their problems, you say, you know, I went to this thing and I heard about this thing, or I listened to this podcast, and they were talking about this thing called self-directed IRAs. And you remember Mitt Romney? Like, you might not, but I Googled this guy, Mitt Romney. And when he went into office, he had this thing called a self-directed IRA, and he made like, I don't even know, way too much money. And everybody was like saying, oh, he's doing something illegal, because he could never have made that much money in the market. It's impossible. The best gurus came out and said, there's no way he could have made that much money over that time frame. And Mitt Romney's just like, oh, you guys are such idiots. It's so simple. He had a self-directed IRA. And all he did is he invested in companies that skyrocketed. And when those companies skyrocketed, they bought him out because they didn't want him in there. They bought him out, and his IRA made a ton of money. So the other thing too I do, and this is a funny way, and then a lot of people their information they get is wrong, and they'll ask their advisor, hey, have you ever heard of self-directed IRAs? And their advisor's going to answer a couple different ways, but usually it's one of 2 ways. Oh, well, we have those. Oh, great. Thank God. Well, you know, how would I go about getting in one? Oh, it's easy. We just fill some paperwork out and we'll move you into the self-directed platform. And at the platform, you know, you can direct the stocks anyway. And, you know, I'll still make recommendations to you, you know, like the one I did last year. You know, you remember that one time I called you and I made that recommendation? Folks, if you're an advisor, I'm sorry, but like, this was me. I didn't call my clients enough. Okay. So I'm almost speaking of me. And, you know, the self-directed platform is not a self-directed IRA. And then you say, wait, no, that's not what I heard. You know, here's how the guy said it about the self-directed IRA. He told me to ask you, if I want to buy a dairy cow with my IRA money, can I buy the cow? And your advisor says, dude, are you kidding me? No. Like, literally, I want to buy a cow every morning. I'm going to go milk the cow, and I'm going to put the milk in a bucket, and I'm going to sell it out front. And then whatever I make on that milk, I'm just going to send it back to the self-directed IRA, and that's going to be my earnings, because I think I'd make more money doing that than investing in the stocks that you've been putting me in. And if he laughs, then he doesn't have a self-directed IRA. And the reason an advisor typically will not tell you about self-directed IRAs or suggest self-directed IRAs is so simple, and it's the big lie. It is they can't get paid. And I was guilty. I knew what self-directed IRAs were. And you know how many times I recommended to my clients to do a self-directed IRA? 0 times. Now, isn't that a shame that all the best secrets and the best answers that the millionaires use, that they're using day in and day out, people like Mitt Romney, are all available to every single one of us, yet none of us know about them, because the people we get advice from are not talking about it because of one reason. They haven't figured out how to get paid for it. But not even them, their brokers and the institutions can't get paid for them. There it is. I mean, I went long on that, and I apologize, but like, that's the reality. That everything we've been taught about money our entire life. What if I told you that everything you've been taught about money and how it works and exactly how it is? What if I told you there's a whole nother side that you've never been told? What if I tell you that is sort of like the big lie, and there's this whole other way over here that the millionaires use? And then what if I told you that the millionaires and banks don't invest money the same way you do? And you would probably ask, well, why? Well, why don't they? Could it just be that they know something you don't know? Or is it just that they're stupid? Because, maybe banks are stupid, but the last time I checked, they know something that we just don't know. And that's it. You have to seek out knowledge. If you want to learn how to really change your life, you have to seek out that financial knowledge, because no one's going to bring it to you. No one's going to serve it to you on a platter. It's you and up to you alone to seek out that knowledge. And all of you on this call and this podcast and this Facebook Live right now, you are what I call my 5%ers. And you know what that means? It's Social Security numbers. 5% of the population will be financially secure at the age of retirement. Only 5%. The other 95%, they will not be ready for retirement. They're going to be working at 65, 75, and 85, not because they want to, but because they have to. All of you listening to this right now, it's because you're seeking something. You're seeking knowledge, and you are part of the 5%. And if you take action on that seeking and you actually do something about it, you will find out that there is a big lie you've been taught your whole life about money.
Huge lies about that.
And I try not to go too deep, because I can make a lot of enemies. And if I really go into what I know, I could probably end up face down floating down some river. So we're not going to go there.
Guido, your ex-private investor, may show back up, right?
Exactly. Yeah.
But that's the thing. I mean, that's why banks are the biggest buildings out there. It makes sense to be the bank, because they're arbitraging, glad to pay you 0.1 or 0.01% on your money and lend it out at 12, 15, 18, 24% credit cards, and arbitrage the difference in there. And that's the thing people don't realize. If you're listening to this on our podcast, or any of the podcasting platforms, you're listening to this on our Note Nation nationwide network of radio stations as well out there, really listen to what Chris is talking about here. He's 100% correct. Things are not set up for the little man. They're set up for the big guy. But you do have the opportunity to be a big guy by using the same tools, using a truly self-directed IRA to use your money, borrowing from your 401k to go out and invest in something. I mean, we had Keaton Andrews from Quest Trust Company on yesterday to talk about some of the 10 principles of seeking good advice, but also not just trusting your financial advisor from a firm. And we're not going to make Chris name any names of where he worked at, stuff like that. But that's the thing. I mean, one of the most powerful nuggets that I was given early on was the Rule 72.
Oh, that's amazing.
Compound interest, getting your money to, how soon is your money going to compound? How is it going to double for you? And how do you leverage that to get where you want to be? You're doing a lot of, I kind of want to bring us back from the financial side a little bit more, and some nuggets out there. You're doing a lot of wholesaling. Are you just wholesaling there in the Buffalo, New York area? Are you doing other parts of the country? What's kind of been your real estate focus, and kind of dive into that?
Sure. Yeah. My real estate focus has changed drastically over the last few years. We're huge flippers, flipped hundreds of houses, and that's what we did for the show. But we're barely flipping houses now, just because the margins are squeezed, and I set rules, and my rule is 20% profit or I don't do it. Yep. Most of what we're doing today is wholesale and wholetail. So the reason for it is it's nimble, it's easy, and I can work on really small margins. And the only thing I have to do is I have to get really good at marketing. So I'm doing a ton of wholesale, and even the wholesale is getting tough, because remember, the market's at a high point. Investors are getting skittish. Flippers are starting to realize what I know, and they're like, well, it just doesn't make sense. So if it doesn't make sense for a flipper and you're only a wholesaler doing assignments, you're going to find yourself pinched pretty quick, where you're going to be holding property. So again, remember I told you, you have to get good at money. So once you get good at money, and you got a lot of neighbors or a lot of coworkers that love what you're doing, you all of a sudden have money to take these deals down. So you already know it's a good deal because you bought it right. Once you bought it right, you take the deal down. Here's where the biggest opportunity I see in the real estate market is right now, is wholesaling. You see, just mimic what the bank's doing. What are the banks doing right now? They're taking all those bank foreclosures. They're not selling them to you and I anymore. They're taking them, they're doing super light cleanouts. They're cleaning all the crap out. They're making the house literally so you can walk through it and it doesn't smell like something died in there. And they're putting it back on the MLS, because I'm so guilty of this, but it's hard to even say it, because the TV shows are out there talking to the masses, saying, look at this amazing opportunity to flip houses. Look, in 22 minutes, or maybe 23, if you got the right network, you can buy a house, you can flip that house, do the renovations, have your wife pick the colors out, she picks the floors out, and boom, we put it on the market. Happy buyer comes in, big smile, they pay us all cash, and we're out, and we made $50,000. It doesn't work that way, but that's what everybody thinks that it does. And the people, not you, the 95%ers, they want what we have. Okay. So why don't you just give it to them instead of the bank? Why don't you go out, do your marketing efforts, get your deals at the right formula, which is I do ARV times 70% minus rehab. That might not work in your market, but that's mine. We get them, we take them down. We literally do a light cleanup, just maybe landscape it. We put it back on the market as a fixer-upper. Why fixer-upper? There's a TV show called that's pretty popular. We call it a fixer-upper. And I swear to God, like, I'm not really that smart, folks. I'm just really good at mimicking what works. And I put it back on the market, and guess what? They all sell over ask. And sometimes I'm embarrassed because I'm used to selling beautiful houses, right? Show houses, HGTV houses. And now I'm putting these on the market, and I'm like, yeah, that's not my house. But it is my house. It's just I don't want to admit it because it doesn't look like that. But that right there, what I've done is now I've got a product that appeals to investors like you and I, and also mom and dad that just want to come in, and husband's going to do the work after work and put the new kitchen in the bath, the American dream. And they're buying the house, but they're not building in a profit margin. Their profit margin it's their dream house that they're going to create, just like Chip and Joanna did. You get the drift. Like, you opened up yourself to the entire market, and you opened yourself up to massive profits. That's what I see the biggest thing. And hey, you know what? If that fails, we always go strategy 1, 2, and 3. Strategy 1, if I can't assign it, I take it down. I list it on the MLS. If that doesn't work, guess what I do? I fix it up myself. I put a renter in there. I take it to the bank. The bank gives me 80% of the appraised value. I pay my investors back because I bought it right. And now I've got a 100% turnkey rental paying me every single month. And if I did it right, I have zero money out of pocket. It's called the BRRRR. And it's pretty cold here in Buffalo, so that works really well.
It's really cold.
That's what I do. I mean, that's what we're doing in real estate right now. And I'll go one step further of what we're doing. We're in Buffalo, so we're in, like, I don't know if you call this a B or a C market now. I would say it's more C, but I think it's trying to be a B.
Right.
We take these portfolios. Once I get a couple of those BRRRRs, I package them together. I show the return, which we're in the teens for our cap rates. I package them up, put a pretty bow tie on them. I ship that opportunity out to California, to New York City, and now up to Toronto. And I sell these properties at full market value because they're not buying it for the equity. They're buying it for the passive income. And I sell turnkey rentals, and really nice ones for that.
Well, that's the thing, is I want people to realize something. You're hitting on whatever hits the fastest, or whatever ends up hitting, whether it's a wholesale, like maybe you just have it under contract and do an assignment, right?
Even if I make $3,000, I'm out, man. The quick money is the best money.
Quick money is the best money when you especially start annualizing returns on that stuff. Then if you have to take it down, you take it down. Just light cleanup if you can. Maybe a little paint and carpet, just a light, maybe, exactly. Maybe if there's a stain on it, as long as there's not blood or dead body in there, let's clean it up so it doesn't stink. But another thing that's important here, I think a lot of people fail to realize, you're not putting it for full price on the market.
Oh, absolutely no.
It's building in that, as I like to say, you're allowing people to waft, they're willing to smell the discount. They come in and they're willing to come in, and also listing at 80, 85 cents on the dollar gives you a lot of opportunity in a bidding war, people to bid that deal up above listing price, less concessions, less things you have to fix because they really want the house. Whereas a lot of people, especially realtors, they'll list it at full price and they have no place but to come down and drop the price.
And you're dead then. You're dead. So yeah, you just nailed it. I mean, that's what we're doing. We're listing them, way under full retail value and in an incredible discount to the average person that's looking at it. But we might only make 10% on these things, and I'm okay with that. Maybe 15, 10, that's how we'll discount them or how we'll mark them up. But what happens every single time is they go in a bidding war. Even in this market where the bidding wars aren't as, they're not as common, we're still driving bidding wars because it's so cheap and they're perceiving that incredible value. And I don't know, I kind of laugh about it, but you know what? It makes all the sense in the world. You're just feeding what people want. And, that Warren Buffett thing again, when others are greedy, be fearful. When others are fearful, then you can be greedy. Mm-hmm. Don't mix that up.
No, do not mix that up. And that's interesting. How long do you think we have before we're going to start seeing major downturns? Do you think
I'm going to put my foot in my mouth because there's a lot of variables to this. But
hang on a second. We will not hold you accountable to it.
You can, because I'm probably right. 6 months. You got 6 months.
Yeah, I think
maybe right you got a lot of political stuff going on, so you got maybe 6 to 8 months. But if you're like redlining it to the 8, you're going to wish you didn't.
We're all talking about end of the year, first of 2020.
Absolutely.
Yeah, I say that we haven't been buying as much as we have,
No.
unless we have gotten a substantial discount on the debt. We're a little better off because we're buying stuff usually at 50 cents on the dollar or less because we're buying the debt and then working to keep the borrowers in there. But I'm avoiding flips as best as I can. Those vacant properties where it's heavy rehab, nah, does not make sense. It's not going to value.
And we're seeing, and here's the thing, the hardest part about what you just said about avoiding them is right now, because the market is cooling, we're getting those opportunities thrown at us every day. And I'm like, nah. Unless it's like, I look at it and I'm like, really? Holy crap. Like how? And then I look at it, but like you guys what you do with the notes is way safer than what we do. I mean, it's just a safer play, and it's basically the same thing. You're just doing it better.
Well, I won't necessarily say safe. There are a lot of moving parts that go along with the due diligence.
There's less of a headache.
We don't deal with contractors. We're not dealing with end buyers, but we do have the borrowers on there. It can be. I had a lady today who reached out to Hazel, who's my asset manager, was like, "Oh," and we've offered this lady a loan mod. We've offered to keep her in the house in some sort of fashion. She's like, "Well, I can't pay this, so I'm just going to hire an attorney." I'm like, "Okay, you realize that attorney is going to want $1,000 to $1,500 retainer to take on your case. They don't work for free. Why don't you just do like we say and pay the $1,500 towards your mortgage? Oh, I'm great. We'll end up with a house. That's the thing. It's but that's the thing too. Our market's increased over time. A lot of people are higher price stuff. You've got to leverage yourself. You've got to be flexible so that you've got more than one exit strategy in the deal. Like you're working into 3 or 4 exit strategies on each asset, and it just flows. Depends on what goes on. That's the smartest thing you can do as a real estate investor, is not to get so sidetracked with just one exit strategy, right, Chris? Just one thing.
Absolutely. Cool. Yeah.
I see a book behind you, The Private Money Guide. Is that your book? You got a book out there?
That is my book. So The Private Money Guide. And I wrote, it's funny, I wrote this book. I wrote it on the way to Mexico. It took me 7 days to write it. But now I know you're like, well, then it can't be very good. I assure you it's really good. It's really, really good. But I did nothing for 7 days but write this book. Everything just flowed through me. So it's The Private Money Guide, Solutions to Finding Money, Where to Go, and How to Ask. And this is the real estate edition. This literally is your holy grail to where all the money is for every deal, but not just where it is. It shows you how to actually structure your opportunity, how to put it together in a marketing campaign so that you can talk to your neighbor in a very sophisticated way. And it shows you how to do this the right way, not the wrong way. And if you miss one step, you're doing it the wrong way. It's great. And I don't know, it's like one of the greatest things I did. I didn't do it to make money on the book. I just did it because I had to, because I didn't see anything else out there that told people how to do this. So it's just a step-by-step guide on how to do it.
Yeah. And that's the thing is when you've come from the other side and you've seen behind the curtain, you've seen the dark side or the things that aren't being truthful out there, it becomes really kind of a passion to share those truths or falsehoods out there. Right, Chris?
And that's why literally every week on my own coin, I am on the road traveling. Sunday, I was in Tampa. I flew in. I got up at 3 a.m. I flew to Tampa. I spoke to a real estate investor group, spoke twice, hopped on a plane at night and flew home. Okay. I didn't ask for any money from the promoter. I went there. I did that on my own nickel. And you know what? I make a lot of money on our money operations, on our funds, on our real estate. So I feel like it's my ultimate duty to go out and teach people how money really works, teach them the secrets of the wealthy, because nobody else is going to. And because I'm doing that, because I'm giving opportunities in the strangest areas are popping up everywhere for me. And yes, I'm making money on those opportunities, but everybody thinks that like what's in front of you is how you have to make money. Sometimes the money's over here, and sometimes that money is deferred down the line a little. If you just focus on other people and solving people's problems and helping them get where they want, I mean, I'm preaching the choir here, you will in turn get what you want. I mean, that's the simple, and it took me most of my life to figure this out. I don't want you guys to think that I've been doing this my whole life, literally, but when I figured this out, and I figured it out because I got desperate and because I literally just, I surrendered, really. I surrendered, and then I figured it out, and I watched what the wealthy were doing, and that's what they all do. They give their time, give their money, give their energy, give their knowledge, all of it, their secrets. They just openly give people their secrets because they know if they do that, it will all come back to them in one way or the other. And sometimes that way it comes back is a front row parking spot at the restaurant. I just want you to all to realize that sometimes that's the get back. Okay. And that's just where it begins. And you should be thankful for each and every single one of those things that are gifted to you.
Mm-hmm. Chris, what's the best way for people to reach out to you? Should they, or before we dive into the pod, you've got an amazing podcast too.
Yes.
It's just full of information, great nuggets.
And just some unbelievable, you were on it. I mean, just some unbelievable people on there. And the podcast, The Real Estate Money School, talks about the journey. That's it. Talks about the journey to success, the ups and downs, and how people did it and how money played a factor. And just check it out. Just Google the Real Estate Money School. And it's fantastic.
Great podcast. Absolutely worthwhile out there. If people wanted to pick up a copy of the book, is there a website or go to Amazon to pick it up?
It's on Amazon, so you can just, do that, or you can go to moneyschoolrei.com/book and you can grab it that way as well.
That's awesome. Best way for them to reach out to you, Chris, to get more information, plug into what you're doing?
Super easy. Follow me on Facebook, Chris Naugle, or follow me on Instagram, Chris_Naugle, and it's Naugle. That is the best way.
Chris, thank you so much for dropping some amazing knowledge nuggets. Your passion flows through you, brother.
Dude, I love it. I just love it.
Yeah, same here, man. There's nothing better than sitting and visiting and sharing secrets with people that are life-changing for everybody that comes in contact with you.
I agree. And I really appreciate your time and you giving me the opportunity to be on the show.
Hey man, you brought a fact episode to the thing, man. PHAT fat.
Love it.
On, man. So thanks so much. We appreciate
you.
it, guys.
You're welcome.
Thanks. All right, guys. Great episode. Thank you so much. Go check out Chris's podcast. Go download the ebook on that, or go to Amazon and buy a copy. Trust me, it'll be one book that you will not want to put down, and you'll take plenty of notes on it, and it'll change. It'll change you. If you start playing by the rules that the rich have when it comes to money, you'll be playing at a whole different ball game than what everybody is taught in traditional education, traditional banking, and stuff like that. Change your money, change your focus, and you'll change your life, everybody. So go out, take some action, and we will see you at the top. Bye, everybody.